Africa's capital markets navigated a choppy 2023, buffeted by global headwinds like soaring inflation and the war in Ukraine. Yet, amidst the volatility, pockets of resilience and promising signs for 2024 emerged. Overall, African markets underperformed initial expectations. However, the continent's diversity played out with regional variations painting a nuanced picture. Despite the headwinds, Africa's capital markets also showcased strengths and areas for future growth. And looking ahead, cautious optimism pervades the 2024 outlook for African capital markets. To help us make sense of this, I'm being joined by Benjamin Boakye, Chief Economist, Second Stacks. Thank you so much, Benjamin, for joining us on Business Edge.
Thanks for having me.
Now, how did African capital markets perform in 2023 compared to expectations? And what were the most significant developments or challenges that impacted the capital markets this year?
Yeah, 2023 was definitely a difficult year for the global economy, and that included the African capital markets. The Ghana markets did all right. I think they were up about 25%. But in Kenya, it was a different story. The markets were down roughly 25-30%. So that was also a difficult year. Nigeria did better, but the currency devaluation also eroded some of those gains there.
Yeah, you talked about the difference in between markets in the Horn of Africa nation and in other places. Now, how does these events affect different asset classes and investor behavior? Were there regional or country-specific challenges that are worthy of note that impacted asset classes and behavior?
Yeah, definitely. In Ghana, the major event of the financial markets in 2023 was a domestic debt exchange program, where essentially the government of Ghana had to adjust the terms of its domestic credit with credit holders, and that even though the broader markets were up about 25%, the financials index was down 7% on the year, and that people I think would point directly to the domestic debt exchange program as causing that. In Kenya, I think there's a broader concern about fiscal management at the top, and that has been passed on to the consumer in the sense that the currency is depreciated to levels that Kenyans had never seen before. So that was a bad feeling in the mood in Kenya, and that largely was, I would say, a fiscal issue. And in Nigeria, you had low oil prices throughout the year for the most part. Forecasts for higher oil and gas prices never really materialized in a sustained way. So there were quite a few headwinds for the Nigerian economy just off of that fact alone.
So how did it play out in the southern part of the continent? It was actually championed by South Africa. And of course, we know up north, it's a bit of topsy-turvy for the economy there. And right at the center of the continent, of course, we know there are insurgents, activities, and different unrest in that particular axis of the continent. How these issues affect the country's capital markets and economy?
Yeah, I mean, down south, there was quite a bit of a conversation about whether fiscal management was adequate. You had a situation there similar to what we saw in Kenya. But up north, in a country like Egypt, it was really a political risk conversation. Some of it was internally generated, and some of it had to do with what's going on in Israel, because as you know, that borders Egypt directly, and Egypt has had to play quite a crucial role in navigating, the outbreak of violence there. So, yeah, I mean, Egypt had a difficult year. Sudan obviously broke down into war. So yeah, there were quite a few flashes of political unrest across the continent that I think, the coups in Chad, for example, ultimately, I just think that next year we're going to have to look very closely at how we're allowing political risk to invade the markets. Because what's also going on in 2024 is you have the AfTA agreement taking hold in a more resilient way, which means that continental integration in the economies and hopefully in the capital markets will intensify to everyone's benefit. But any country that is allowing, political risk, violence to disrupt their activities, they're not going to see those benefits, and that's going to create a haves and have-not situation across the continent that I think we would all like to avoid.
Well, in all of these instabilities and shocks that we see characterized 2023 in Africa, we are also aware that some African markets showed resilience and offered positive signals for the future. So if you are going to do a critical assessment of these African countries, what would you say were the key drivers for performance in terms of government policies, probably fiscal policies, and of course different areas whereby investment came in that was able to rev up the performance for these regions?
Yeah, so, there was a really interesting dynamic, particularly at the tail end of this year where, oil prices have been relatively depressed and relatively tame, but commodity prices, excluding oil and gas, have rallied. So cocoa, gold, coffee, they've all seen a significant rally in the fourth quarter. So the government, the fiscal management teams that focused on expanding production, right, investing in the human capital and in resource generation in the earlier parts of the years, they're the ones seeing the uplift now as we move into 2024 because those commodity markets are still roaring. And hopefully this will continue, into the new year.
Well, you know that so many African countries are cash-strapped right now. A lot of countries are hugely in debt. Now, where would they be able to raise the fund? Of course, logistics is also a problem owing to the devastation caused by criminalities and insurgencies and unrest across the region. So how would they be able to break the barrier in terms of ensuring security and, of course, generating the funds to scale up their markets?
Yeah, I mean, those are definitely related factors, right? Governments, broadly speaking, on the continent were cash strapped. The currencies didn't really have a great year. And like I mentioned earlier, Ghana essentially managed itself through a default throughout the course of the year. So the global framework for managing sovereign defaults in smaller, developing countries, it's been tested, and largely it's failed. I don't know that we would say that, countries that have had to go through sovereign defaults have been able to come out on the other side in a timely fashion, right? Part of it was because a lot of the debt that countries have now, as opposed to in years past, is Eurobond debt. A lot of African countries tap the Eurobond markets. So those creditors, they're all over the world. That's a public secondary market. Folks can invest from wherever. So trying to manage your way out of your, dollar denominated debt has become far more tricky than it was years ago. And when you're locked into your Eurobonds, and you have political risk kind of flare up unexpectedly in your country, that's going to spike your yield. So again, that has impacted sovereign budgets across the continent. And it was a double whammy, and it was a very difficult thing to get through. Ghana has done a good job of being very proactive in its dealings with the global community and with domestic creditors. But the same type of avenues need to be more readily available to countries on the continent that are at risk. Otherwise, 2024 will also be difficult for the smaller, more vulnerable countries.
So does that mean that we shouldn't expect any sort of appreciable growth for Africa in 2024 because we're looking at global factors that does not seem as though it will fade away anytime soon. We're seeing currency fluctuations and depreciations. We don't know when appreciation will come to those legal tenders across Africa. We are seeing debilitation in terms of unrests. So many issues that we're seeing in Africa, and of course a tie down in their ability to upscale or improve on exports and export of their materials. So does that show or does that mean that we shouldn't expect any sort of growth for the year 2024?
No, I definitely would not say that. If you look at the larger economies on the continent, except for Nigeria, which I'll get to, interest rates and inflation, which has been the most pernicious factor on the capital markets this year, has very clearly started to trend downwards. In Kenya, it's trended downwards, into range for the central bank there. And in Ghana, we just saw, one of the steepest drops in inflation that we had seen in a very long time. So with the inflation picture getting better, you can expect a better economy, right? You can expect more consumer activity. You can see more investments because folks aren't believing that their returns are going to be eroded down the road. So, as the global inflation portrait gets better, I would say that the African continent will position itself to benefit as well. Unfortunately, in Nigeria, inflation has not come down as quickly as we'd like to, as we would have liked to see. So in the short term, we need to see, just more firm central bank policy rate directionality coming out of the Central Bank of Nigeria. And the fiscal policy needs to be clear as well, because I think some of the big reforms that President Tinubu had initially come out the gate looking to implement, they've faltered and they haven't really inspired the type of confidence in the Nigerian economy that we're all hoping for. So that's the big wild card next year. If Nigeria gets it together and they can find a way to tame inflation, which they should, because the global backdrop, is looking more favorable, then Nigeria can hopefully see, would be able to outperform. I think it's the 2.5% forecast. Ghana, I would expect to outperform. And Kenya, their issue was a lot of foreign outflows of capital. If they can stem that in the new year, we could be looking at a positive 2024.
Now, still looking at 2023, we know it's a challenging year. What lessons are there, most especially for institutional investors and other stakeholders in terms of accessing exciting and profitable investment opportunities available in Africa's capital markets?
Yeah, looking forward, I think, or I guess looking back, I think if investors could do it all over again, I think the number one factor that they would have prioritized would have been, economic management. So whether we're talking about, corporates or sovereigns, we would have been looking very closely at specifically what type of activities management was taking, because the countries that were able to stimulate growth in their core markets, right? Those countries did better and those stocks did better. So looking back, I think, as opposed to being able to kind of take a step back and just look at the big picture and say, okay, we think oil and gas will do well, we think this will do well, so let's allocate based on that. I think 2023 required a lot of deft management, on the part of sovereigns and corporates. So looking back, I think that's the number one metric we would have looked at. We'd have looked at who's really on the cutting edge of policy and who's taking, very active measures to make sure that their corporate, their capital structures were intact and that the markets that they were in were likely to hold. So it's a much more intense analytical environment that we were in 2023, whether we knew it or not. And I think those lessons will bode well for folks that take them into 2024.
Now, we'll still look at economic policies, Benjamin, but then in context of equity markets. Now, how well have economic management teams for the major economies on the continent positioned equities markets for success in 2024, looking at the global macro context?
Yeah, I mean, so, kind of as I've mentioned, Nigeria probably has gotten some of the worst marks just because, when you come into a new government and you have a new mandate, and everyone knew, that the Nigerian market was already in pretty dire straits. What I think the global investor community was looking for were some pretty dramatic economic reforms from the new government, and they got some of that. When the government got rid of the fuel subsidy, for example, that was one of the clear policies that had to go. But I think that the Nigerian economy is too big and too diverse for there not to be more elaborate pivots and more targeted investments, more elaborate relationship building with the global economic architecture. We just wanted to see bigger swings, and I don't know that we've gotten that yet from the economic management team.
But Benjamin, we've seen the Nigerian president during the course of the 6-7 months that he's been in power, traversing different continents, different countries. Even at NASDAQ, where he rang the bell, he spoke extensively to investors, telling them that he has policies on the ground that will remove the bottlenecks and will eliminate fears for investments that should come from them. So don't you think that his words with the policies that he has brought on board in the last few months now, don't you think it should be enough to attract these investors, should make them want to plug in their finances into the Nigerian economy?
I think that the Nigerian opportunity is so massive that it's not worth it to approach it in that type of a piecemeal manner. All right, reforming the Nigerian economy, it's something that will require from what I think, a much bigger paradigm shift. And that's when you get to a point where people will feel like you're going to optimize, or you're going to get out of Nigeria what its true potential is. And I don't know that. Yeah, sure, I agree. We definitely need to give the new government more time for some of its economic policies and reforms to take hold and for the benefits to become apparent. But I think that we could start messaging a much bigger paradigm shift. That's what you would have wanted to see as a new government was coming in. And I think had we seen that, we'd have seen a little less investor skittishness and slower outflows of foreign currency. Going into 2024, like I said, if some of these measures that have been taken, if they're able to start reaping benefits, then you could see some positive traction. But I think the wholesale paradigm change that investors could get excited about with regards to Nigeria, that has not materialized.
So in terms of general political risks and geopolitical forces, which African countries would be affected the most? What should we expect from them, and what should be their response to give them a vantage position in channeling their economic course?
Yeah, so North Africa, like I said, Egypt is a bit tricky because it's right there on the border of what is arguably the one of two major hot wars that are going on in the world right now. So investors generally are going to be a little wary of Egypt in 2024. In West Africa, Nigeria, there's a little bit of unrest up there in the north, but it's also surrounded by this this wave of coups that we've seen in the lower Sahel, and that is also problematic. I think for the most part it's died down, but what it definitely belies is a geopolitical tension that that has the potential to creep into the markets, sometime in the medium term. So folks, I think, are going to be wary about that as well. But oh yeah, and then in Ghana you have an election in 2024, and that's always a tricky economy to navigate because, well, luckily here we don't have an incumbent that's running again. So the likelihood of just outsized economic impact due to the elections itself, I think are low, especially when you factor in Ghana's IMF budgetary support, which requires the government to stay within spending levels that have been pre-arranged, and that should put in some structural support into the Ghanaian economy during this election year, and hopefully keep things on an even measure.
Well, I tell you, these are part of the conversations that we'll continue to bring to the fore, and economic metrics that we'll continue to monitor for Africa and see if the projections would actually come true, because that will be very, very vital to the growth of businesses and, of course, the overall economy of the continent. Benjamin Barchier, Chief Economist, Second Stacks, thank you so much for talking to us.
Thank you for having me.